The Australian share market has been on a rollercoaster ride over the past year, climbing in the lead up to the US election and hitting a record high in February before Donald Trump's so-called Liberation Day tariffs announcements triggered a correction. But since the low in early April, the ASX 200 has catapulted 17% in just under 10 weeks. Investors are pricing in better than expected trade talk outcomes as the US president negotiates with various leaders.
Where is this money coming from, though, to prop up the whole entire Australian market? Well, there is some buying from offshore companies into the Australian market, but it's not in large volumes that would influence the market. I think what you're seeing is a lot of institutions at the moment are really sitting on some form of excess cash, waiting for opportunities in the market. But who is fully invested? Well, that's our industry super funds. It's our self-managed super funds. It's the Australian investors who have a pool of money which needs to be invested.
And those super funds have bounced back, with the median balanced fund growing by 2.6% last month. Researchers at Super Ratings says it means they're up more than 9% for the year, which is more than the long-term 7-year average. The risk-on sentiment extended to the currencies markets, where the Australian dollar hit a near 7-month high with the greenback at just over 65 US cents. It's also stronger against the Chinese yuan, as data showed exports there slowed in May as US tariffs take effect. So, all up, the ASX 200 added 0.8%, with the consumer discretionary sector doing best. CommBank hit yet another record, propelling the other big four banks. Tech stocks also did well, like NextDC, but there was some weakness coming from the industrial sector. But energy rose, and that's as the oil price jumped more than 3% since this time Friday, to its highest price since April. Meanwhile, petrol prices have soared in the lead up to yesterday's public holiday in some states and territories. The Australian Institute of Petroleum says the national average price for a litre of fuel rose 4.3 cents last week to more than $1.80. The financial regulator has written to the chairs of the boards managing Australia's $4 trillion superannuation funds because of concerns about the way they're handling cybersecurity. APRA says it's observed weakness, especially in authentication controls, which indicate a gap between its expectations and current industry practice, and has ordered them to perform a self-assessment of those controls by the end of August. At a minimum, the regulator wants multi-factor authentication for all high-risk activities like changing member details, withdrawals, benefit payments and investment switching. It added that disadvantaged groups should also be considered and offered solutions if they opted out of certain digital channels. It follows what's known as credential stuffing attacks earlier this year, where cyber criminals used personal details and passwords available on the dark web to breach the systems of a number of super funds. The international outlook is holding back consumer confidence, with sentiment rising only slightly last month to a reading of 92.6. Westpac and the Melbourne Institute say, and you'll see it on your screen right now, that anything below 100 indicates pessimists outnumber optimists. Lower interest rates and easing inflation are clear positives, however, and are even leading some to consider major purchases.
We are starting to move clear of the cost of living issues that really dominated over the last 3 years. That particular measure has really been a bellwether for cost of living issues. It captures the sticker shock of higher prices. And the readings we've had have been exceptionally weak. So we're not back into positive territory just yet. And certainly it's still well below long-run averages, but it's good news that we're moving out of that deep, dark hole. It's not quite as oppressive as it's been.
Meanwhile, business conditions have fallen to their weakest overall read since the COVID pandemic, with NAB economists warning any ongoing deterioration would likely hit business confidence. And another global media giant is cutting the cable as viewing habits shift, splitting its streaming and production business from its more traditional cable and free-to-air unit. Warner Brothers Discovery says the two are expected to be publicly listed by next year, and it follows a similar move, Janice, by rival Comcast NBC Universal.